Let's invite our two experts today, Mayuresh Joshi of William O'Neill and Richard Jain of Angel Broking join in. Gentlemen, good afternoon to both of you. Our first query is ready as well. We have a caller joining in. That's Kiran Kulkarni. Hi Kiran, good afternoon. I understand you have shares of Reliance?
Yes, madam. Good afternoon to you. Hello.
Hi, good afternoon. So tell us, how can we help you?
Madam, I have 1,000 shares of Reliance and I am a long-term investor. Hello.
Okay, and you've bought it close to what, 1900, right?
Yes, madam. I have brought it close to 1900. Can you tell me how long will it take for a year and what would be the appreciation of it?
Okay, sure. Well, I must say that, it's a very high conviction call to be buying 1,000 shares. So good for you. Of course, the standard disclaimer applies that, Reliance Industries owns the company that owns and operates CNBC TV 18. But Mayuresh, first to you, what an explosive AGM. The stock has had a recent good run. Brokerages have raised the target now to 2,000 plus. Would an investor who has bought close to 1,900 stand to gain in the next 1 year? Or do you think he'd be better advised to hold on for an even longer term?
Afternoon, Sumera. I think the sense of holding it for the longer term does provide absolute fodder and logic to sticking around with Reliance. It was an explosive AGM. It was a breathtaking one, and the vision that Mr. Ambani put forth is very, very encouraging. So again, I think the three more important takeaways. The first one, in terms of the company being net debt free, I think the category that the company now falls in is that it has ample amount of cash with capex done for most elements of its businesses. So if you look at the standalone businesses, the capex that is there in terms of the petchem to the chemical conversion business as well, a large part of that capex is done with the fiber optic outlay, what you're probably looking in terms of geo platforms and the capitalization of the capex thereof. A large part of that has already been done. So to that bit, again, the kind of cash on their balance sheet is very, very encouraging. The second element that Mr. Ambani spoke about in terms of 5G technology actually being ready at Reliance's end, they are just waiting for the spectrum to come through. And the kind of opportunities that will come through both locally and globally, I think there are humongous opportunities that present itself on this front, specifically in the terms of anti-China sentiment that you're probably looking at. The third element obviously is within the oil to petrochemical business itself, a large transition in terms of being carbon free over the next 8 to 10 years is a huge move, because what you've seen a lot of global petrochemical players and oil majors actually do is convert their oil into the petrochemical business, which is a higher yield and a higher margin business. So if the Reliance, with the kind of feedstock that is available to them, is able to do that successfully, which they will, my own sense is that even the petchem EBITs over the next few quarters stand up, deriving greater valuation. And the Reliance Retail, I think any big investor coming into that front, I think is going to have humongous SOTP impact and implications as well. So yes, I think I agree with your point, Sumera. I think it's better if he extends his horizon beyond the year and hold on to the stock. I think your ROI will be very, very good over the next 1 to 2 years.
Okay, Mayuresh, what about you? Because even in the worst of the NBFC crisis, Bajaj Finance has weathered this storm and quite successfully. You see it as a leader even in the future, and any advice for our new young investor?
Well, absolutely, Sumera. I think I would like to compliment her in the first place, starting young and starting at the right pace. So I think take your time to gauge yourself, how you look at the markets, assume your risk rewards, and take a medium to long-term horizon, because compounding of wealth probably will happen over that periodicity of time. Having said that, and you're absolutely right, Sumera, on the second count as well, I think sticking with leaders is what our belief at William O'Neill also has been over the past few decades. So Bajaj Finance has been a leader within the NBFC space. Unfortunately, because of the pandemic, the tapering off, both in terms of the AUM growth that we were witnessing at a consistent pace over the past few years, that has probably come off. the need to provide more in terms of balance sheet dynamics and the provisioning coverage ratio at 60% is a testimony in terms of how the PCR actually is holding up compared to the exposures that they've got across different asset and bucket classes. But again, the leadership that they've got in consumer durable loans, SME might be a pain point at this point of time. But again, I think the bounce back that one really expects because of their balance sheet strengths and because of the leadership position, I think that should hold them through over a medium to longer period of time. The second element obviously is in terms of how the entire parameters are based. And obviously, I think even if you taper down expectations for the better part of FY21, both in terms of loan growth actually moderating to single digits, expectations in terms of asset quality pressures continuing on the balance sheet, but still stabilizing with GNPA at 1.75, net NPA is expected to be below 1%. NIMs expected to remain around 9.5%. The return ratios still remain extremely strong, and the capital adequacy in excess of 21-22% gives balance sheet support as well. So yeah, you can continue holding on to the stock. As I said, our methodology actually prefers leaders, and winners always come through leaders into their individual spaces as well.
Okay. The next query that we have is from Sridhar K. He writes to us from Bengaluru. He has 5,000 shares of PNB, which he has bought at 88 rupees. He wants to know now what he should do because the time horizon that he has in mind is 2 years. And he's also looking to for advice on whether he should average at current levels. Mayuresh?
You should give it time and not average it. Sumer, I think the logic is pretty clear here. The results have been very, very poor so far. And the expectations largely in terms of the disbursements growth is still expected to remain very, very muted. On top of that, if you read through the transcript at the end of Q4, the kind of recoveries that they're expecting are still expected to be in a range. Therefore, I think the write-offs that they've probably done at this point of time, the need for elevated provisioning, specifically in terms of the moratoriums that a lot of customers have availed during this pandemic, and the standard provisions that they need to make on their existing balance sheet, I think that is going to dent into the cash flows of the bank itself. The third element obviously is the need in terms of having a very, very strong tier 1 ratio and the infusion that is expected to come through for the public sector universe as in general from the central government itself. So I think that is the need of the hour in terms of protecting and pushing strong advances growth as well. What all this has led to is poor return ratios, ROAs, ROEs, and that is the way it might be actually getting stuck up over the next few quarters as well. So I think the underperformance of the public sector universe might very well continue. So either you have to have a longer term time horizon to probably stick around the grind that these stocks will go through, or as I've always believed, I think stick with the leaders on what our philosophy believes in the larger private space, which will give you entry opportunities over the next few weeks and months.